If you're looking for real ways to make extra money, you're in the right place. In this video, I'm going to show you exactly what you need to know, so stick around until the end. Let's get started.
Welcome to The Explainer. So today is all about completely demystifying finance, replacing all that intimidation with total empowerment, and really giving you a clear, actionable guide to start investing. You know, if you've ever felt like building wealth is some exclusive secret club and you just didn't get the password, well, you are in exactly the right place. Today, we're going to show you that prosperity is absolutely 100% within your reach. Let's get into it.
Is your money actually working for you? Okay, let's really dive into this. Because the truth is, you absolutely do not need to be a Wall Street financial genius to start building wealth. You really just need to understand a few core concepts. And then, take deliberate action. Think of it this way. Your money should literally be your hardest working employee, working around the clock for you. And today, we're going to show you exactly how to hire it.
Section 1. Why you must invest. Beating the invisible enemy.
A lot of people out there kind of think investing is just this optional hobby for folks who are already wealthy. But as our sources today reveal, it's actually an absolute necessity if you want to protect your future. Now, hey, don't get me wrong, a cash buffer and a safe bank account, totally essential for emergencies. But leaving all your surplus money sitting in cash means there is this invisible enemy that is constantly shrinking its value. Investing, on the other hand, yeah, it involves taking on some volatility by purchasing assets, but historically, it is hands down the most effective way to outpace that enemy over the long term.
So, what exactly is this invisible enemy? Well, it's inflation. With inflation hovering right around 3% recently, that cash sitting safely under your mattress or, parked in a zero-interest checking account, it's quietly losing its purchasing power year after year. To put that into perspective, in 5 years, $100 just won't buy you what it buys today. It's wild. And that is exactly why investing is your absolute ultimate shield to protect the value of your hard-earned money.
Section 2. The Magic of Compound Returns, the eighth wonder of the world.
And that brings us to the incredibly hopeful, honestly really exciting part of our journey today. This is where time itself literally becomes your greatest investing superpower. As JP Morgan Personal Investing puts it, compounding is sometimes referred to as the eighth wonder of the world and can be an investor's best friend. Now, what does that actually mean? Well, compounding simply means you're earning growth on your original money, plus, and here's the kicker, you're earning growth on the growth from previous years. It's like a giant snowball effect for your wealth.
Let's actually look at how that math works in practice. So say in year 1, you make a $100 investment at a 5% return. That earns you $5. Cool. But in year 2, you aren't just earning 5% on your original $100 anymore. No, you're earning 5% on $105. So your return magically grows to 5.25. Now that might sound small at first, but stretch that out over decades, and this compounding does all the heavy lifting for you, snowballing your wealth effortlessly.
Now, you might be sitting there thinking, okay, but I need a fortune to even get started. Let's just smash that myth right here, right now. Thanks to fractional shares and all these modern brokerage accounts, absolute beginners can begin investing with literally as little as a single dollar. $1. You do not need to be rich to start. You just need to start to become rich.
Section 3. Demystifying the investment options, translating the jargon.
Look, the financial world uses incredibly confusing language. Sometimes it honestly seems like it's on purpose, but we are going to break down that barrier right now so you know exactly what your choices are. First up, equities, which are commonly known as stocks. When you buy a stock, you aren't just buying some random ticker symbol bouncing around on a screen. You are buying a partial ownership stake in a real living business. If that company grows and prospers, your fortune rises right along with their success. Pretty cool, right?
Now let's flip to the other side of the coin with bonds. If stocks are ownership, bonds are basically you acting as the bank. You're lending your money to a company or maybe a government for a fixed term. And in exchange for that, they pay you regular interest. So it offers a much more predictable, generally lower risk return compared to stocks.
Then we have ETFs and mutual funds. Just think of these as a giant basket. Instead of putting all your eggs in one single stock's basket, you buy one ETF or mutual fund, and that single basket contains tiny pieces of hundreds, sometimes even thousands of companies all at once. It's instant diversification. You don't have to stress about picking the perfect stock. You can just buy the whole market.
Let's walk through a few of the best investments for beginners, derived from Bankrate. First up, a 401k or workplace plan. Listen, if your employer offers a match on your retirement contributions, that is literally free money. Do not ignore it. Beyond that, from mutual funds to high-yield savings, you've got this complete toolkit that you can organize based on your own risk level and what each tool is best suited for.
Section 4. Understanding risk and reward. Mastering your mindset.
Okay, we need to pivot for a second to the emotional side of investing, because honestly, understanding your own mind and your own reactions is just as crucial as understanding the math. The beautiful thing is you can completely tailor your approach based on your age and when you actually need the money. Investing for growth usually means buying stocks for long-term capital gains, meaning you accept a bit higher volatility for higher potential returns. On the flip side, investing for income focuses on things like dividends and interest for steadier, shorter-term payments. Basically, your strategy should perfectly reflect your personal timeline.
But no matter what strategy you choose, your mindset is without a doubt your greatest vulnerability. Believing you've somehow found a magic system for picking winners, holding on to a truly bad idea just to avoid taking a loss, or reacting to the chaos of daily market news, all of that can quickly derail you. Let me just ask you right now, how would you honestly feel if your account dropped 2% today? It's so easy to panic sell, right? We've all been there. But remember, short-term market fluctuations are completely normal. Discipline, patience, and a rock-solid long-term mindset, those are your ultimate keys to prosperity.
Section 5. Your step-by-step starting guide, the action plan.
So, we've covered the why, the what, and the mindset. You are officially equipped with the knowledge. Now it is time to map out the exact steps to cross that threshold and actually become a confident investor. The crucial point here is to follow these 4 actionable steps directly from our financial sources. Step 1. Build a cash buffer of 3 to 6 months of living expenses. You absolutely need that emergency safety net before you let your surplus money go out and work for you. Step 2. Figure out your goals. Step 3. Choose your account structure, like maybe a workplace plan or standard brokerage. And Step 4. Start small and stay disciplined.
And hey, if you're still wondering, where do I even find the extra money to start? Check out this example from HSBC. If you spend, say, $40 a day on premium coffees and snacks, which adds up fast, just skipping that could equal $800 a month to invest in your future. $800! Small daily lifestyle choices are entirely within your reach, they're in your daily control, and they can completely fund your financial freedom.
We've demystified the jargon, we've shown you the absolute magic of compounding, and we've built your action plan together. Your money is sitting right there, ready to go to work for you. So the only question left is, are you ready to let it? Thank you so much for joining me on this explainer. Go ahead, take that first step, open that account, and start building your prosperity today.
And that's a wrap. If you found this helpful, make sure to give this video a thumbs up. It helps more people find this content. Subscribe so you don't miss our next video, and check out the one on the screen right now. It might be exactly what you need next. See you there.